Hey everyone, and welcome back to the channel. My name is Hamish Hodder, and in today's video, I'm going to be answering a question that I've seen a lot in the comment sections of my videos, and also a question that people have been asking me in my messages, and that is, Hamish, how do you buy US businesses, US stocks from Australia? And it kind of makes sense that I get this question quite a lot, because if you've been following the channel for any amount of time, you would know that I invest probably most of my money in US stocks, and I spend a lot of time researching and looking at US businesses. And of course, I'm Australian, I'm from Australia, so a lot of people are in a similar situation to me, and they want to know how they can invest in US businesses. And I think there's a couple of important things to mention here, and that the first thing is that it's sort of like, why would you want to invest in US businesses? Because of course, if you live in Australia, you can invest in, there's thousands of Australian businesses that you could invest in on the Australian Stock Exchange. So why would you ever look to the US? And well, I can answer that for myself. Personally, there's two reasons for this. The first is that the US just has a lot more businesses that are highly successful. And for that reason, it's easier to find businesses that fit the models that I look for, which is really consistent growth for the past 10 or 20 years. They have a really strong management team that's getting a high return on capital, and the businesses are in areas where I'm interested. A lot of the businesses on the Australian market that are really successful fall into a couple of categories. One would be resources, because we have a massive mining industry in Australia, and the other would be banking and finance. And even though I'm a finance major, or I study finance, investing in those businesses really isn't that interesting to me, and they're very complex. So I like to keep my investments simple into things that are sort of either consumer discretionary, so things that people are buying with their extra income, or consumer staples, things that people buy every single week regardless of what is going on in the markets. And there's just a lot more successful businesses of those types over in the US. So that's the first reason. And the second reason is that because there's so many more people looking at US businesses, there is a ton more information out there on the internet about these businesses. And it's easier to find the information and to learn everything about the industries in which they operate, their competition, and how these specific businesses, what are their strategies going forward, and that sort of thing. And that's really helpful in sort of formulating your investment strategy around a particular business. It's really important that you fully understand what you're investing in. So for that reason, I find myself looking at US businesses more than Australian businesses. And of course, in this video, I'm going to be showing you some of the different ways that you can approach investing US stocks from Australia in terms of sort of the platforms that you could use, trading platforms, in order to invest in US stocks. Now, of course, in this short video, I could not possibly go into every detail about these different platforms. So make sure that if you are going to go ahead and use one of these platforms, that if you want professional advice, that you seek professional advice from a financial advisor, and that if you're not going to seek professional advice, make sure you at least read all of the terms and conditions and understand all of the fees and different things that are associated with that account. What are the benefits and what are the risks, and assess them yourself. But I will be going through some of the benefits and risks of risks as well, but mostly the fees and how much they cost of some of the major platforms that you can use in Australia to invest in US businesses. So let's get into it. And I first thought that we would look at the big four banks. So there's four major banks in Australia. There's Commonwealth Bank, there's National Australia Bank, NAB, Westpac, and ANZ. And all four of these banks offer Australian domestic trading, and they also offer international trading. Now, these are the most reputable banks that you could invest with. They're the safest banks. All four of these banks are in the top 25 safest world banks, which is really impressive. We have one of the best banking systems in the world here in Australia. So for that reason, you may just want to go with one of the four major banks. So let's go through and talk about what are the kinds of fees that are associated with each of these four major banks when you want to trade internationally. So the first one we can look at is Commonwealth Bank, and they have a platform called CommSec, and specifically for international, they've got CommSec International. Now, this is the platform that I personally use for my main portfolio. So if you're interested, then you can use this. And I'll explain why I use this platform towards the end, sort of the major reasons why I've picked this platform. But let's just get into and talk about what are some of the fees that are associated with using this platform. So you can invest in a ton of different markets, international markets from the CommSec portal. However, because of the title of this video and the purpose of this video, we will just talk about how much it costs for you to invest in US stocks. So if you are investing up to $5,000, then it's going to cost you $19.95 US dollars per trade. So that's buying the stock and selling the stock. You will be charged each way. And essentially that means that if you invest $5,000, which is the maximum for that cost of brokerage, that means that the minimum cost to you on a trade is 0.4%. So if you invest $5,000 on the CommSec platform in US shares, you will start your position down 0.4%. Then if you're making trades from between $5,000 and $10,000, the brokerage is $29.95, and that would mean that the minimum cost would be 0.3%. So if you invest $10,000, it's going to cost you $30, and that's going to be 0.3% that you start down. And then any trades over $10,000, it's going to be a flat 0.31% of whatever the trade is. So that means that that is your cost. You're going to start at 0.31% down. And that's quite low comparatively to some of the others, and we'll go through all of them, of course. But that's it's pretty fair. I don't think that's too extreme. But of course, that's not the only cost. Because when you're buying US shares, you need to transfer the money from Australian dollars into US dollars, and Commonwealth Bank, of course, they take a little bit on the transfer, and that's called a foreign exchange or an FX fee. And that fee for Commonwealth Bank is 0.6%. So they're going to charge you 0.6% for the FX, and then you're going to be charged brokerage on top of that. And that essentially means that, let's say, for example, you were going to invest $5,000. For the brokerage and including the foreign exchange transaction, it's going to cost you about 1%. So about $50 of your $5,000 investment. So $50 on the way in and $50 on the way out, which is not too bad. But that means that if you wanted to just match the market, you need to outperform the market by 2%. Then there is what's called an inactivity fee, and this is $25 US, and this basically means if you don't make a trade in a year, so from January 1 until December 31st, if you don't make a trade throughout that period for a particular year, then you're going to be charged $25. Now, this probably isn't going to be a problem because it's likely that you will be making at least one investment each year. So that's something to be aware of, but it's probably not something that you will be too worried about. So the next one we have here is NAB, so National Australia Bank. They also offer international trading. Now, I personally haven't used this platform, but I've seen other people use this platform around me. My close friends have used it, and I've sort of watched over their shoulder. And the platform looks quite easy to use. It looks like it's a good platform. It's probably a little bit smoother than the CommSec International platform, if I'm being honest. The CommSec platform is pretty basic and it's quite slow. For what I'm doing, which is investing very irregularly, so I don't invest very often, and when I do invest, I invest quite a lot, and for that, it's perfectly fine. I don't do any research on there. It would be a pain in the neck to do research on there, so if that's something you're looking for, then maybe those platforms aren't for you, but I do my research elsewhere, and then I just use the platform to make the transaction. But anyway, so NAB stocks. So again, you can invest in sort of many different markets internationally, but for the purpose of this video, for US stocks, it's going to cost you $19.95 for up to, it's going to cost you $14.95 for up to $5,000. So that's a minimum cost of 0.3% of your investment. It's then going to cost you $19.95 for investments of $5,000 to $20,000, which is a minimum cost of 0.1%. So if you invest $20,000, it's going to cost you $20, and that's going to be 0.1%. And then anything beyond $20,000 is a flat fee of 0.11%. So that's actually lower than CommSec in terms of brokerage on the higher end. On the lower end, it's pretty similar, but on the higher end, when you're investing more than $10,000 or $25,000 or $20,000 at a time, it is a little bit cheaper. However, of course, there's a however, there always is with these companies. They charge a little bit more on the foreign exchange. So CommSec charged 0.6% on the FX fee, and NAB trades, well, they say that they charge somewhere between 0.5 and 0.8. So I don't know why it changes depending on how much money they want to make in a day, but I would assume that you're gonna get charged the higher end of that. I would not trust the lower end of that bracket. And I would also, of course, always look at how much they're charging you when you do transfer money into US dollars when you're making a trade. But that essentially means that if you're going to invest $5,000 on NAB trade, it's going to cost you somewhere between 0.8 and 1.1%, which is somewhere between, what have we got? Somewhere between $40 and $55 per trade. So ComSec was $50 per trade and NAB is $40 to $55. So fairly similar in terms of the overall cost when it comes to when you add brokerage and foreign exchange together. Interestingly enough, they also have a high interest savings account within the trading platform. So if you have cash sitting on the trading platform, you can actually earn 2% if you have less than $1 million, which I'm assuming most people here have less than $1 million in their trading account. So that means that your cash isn't just sitting there, it's actually earning 2%, which is quite a high rate, actually. And if you have more than $1 million of cash, then it's 1.5%. But that's still a really great return, and it's something that Commonwealth doesn't offer. You would have to keep your cash, like I do, in a separate high interest savings account that's off the trading platform. So that's just something else that's nice with the NAB platform. And again, of course, they have an inactivity fee, which means, again, if you don't make a trade within 12 months, then they're going to charge you a fee. And instead of Commonwealth, which charged a $25 flat fee, NAB trade charges you 0.5% of whatever your portfolio value is. So let's say you had $1,000 invested, then that flat fee would be $5. All right, so we've got a couple more of the big four banks left here, and we've got Westpac next. Now, I've never used this platform. I've never looked at this platform. So make sure you do your own research on this one, but I can tell you what the fees are for this, or the fees that I could find at least for this one. And essentially it's $20 US for up to $5,000. It's $30 US for up to $10,000. And then it's 0.31% for over $10,000. Now, I couldn't find their foreign exchange fee, so that's probably not a good sign. I mean, whenever these companies hide it so far that you actually can't even find the fee until you're making a trade, that's not a good sign. So if you are using this platform, before you click trade and it lists out all the costs, before you transfer money into the account and it lists out all the costs, make sure you see how much that is and actually calculate it. Calculate how much they're charging you on the foreign exchange, because the fact that they don't list it as a flat rate is kind of concerning to me personally. And then of course they again have an inactivity fee, and this one is $63.50. I have no idea why they have such a high inactivity fee. It's kind of a weird thing to charge people. It's like, I mean, it's a lot, $60. I mean, I understand $20 if you're not using the platform and you've just got money sitting in the cash of the account, but $63, really? Like, do you really need, anyway, doesn't matter. ANZ, the last one, and this is by far the worst out of all four. If you're serious about investing, I mean, I can't really recommend that you don't use this platform, but let me just show you how bad it is. It's not good. So up to $10,000, it's $59 a trade. So that's the cheapest you can pay, $59 a trade. So that's a cost of 0.59 per trade minimum. If you invested $1,000, that's a 6% cost, which is just ridiculous. I mean, it's just not a feasible option for someone who's just getting started. And then they have a bunch of these other fees, which none of the other banks seem to have. So they have a $20 fee for just doing an electronic transfer. They have a $100 fee for transferring out of the account. And then they have an FX cost of 0.6. So their foreign exchange is also expensive. And they have an inactivity fee of 0.5. So if you invested $5,000 on this platform, it would cost you 1.6% on the way in and 3.2% on the way out. And that's a total cost of $240 for a trade, which is it's just ridiculous. The others are way better, and I'm sure that their platform can't be that much better that it's worth the extra money per trade. So if you're picking out of the big four banks, I would suggest that you can move, at least I personally would move towards using either NAB or Commonwealth, or even Westpac maybe, but definitely NAB and Commonwealth are probably the most attractive, in my opinion, out of the big four banks. All right, so that's the big four banks, and now I just wanted to talk about sort of some alternative platforms. Now, I've never used any, I've used one alternative platform, so I felt like it wouldn't be right of me to talk about these other smaller platforms that I haven't used. I can talk about the big four banks because they're all very reputable and secure banks. However, when it comes to smaller companies that are sort of starting their own brokerage firms and they're very small and they might not be as secure or as safe, I wouldn't feel comfortable just talking about them with you. So I'm just going to talk about the one that I've personally had experience with. And many of you would know that is Stake Trade. This is an Australian company that's pretty new. It was founded in, I think it was founded in 2017 is when it went live. So it's very new, only a couple of years old. And essentially they offer $0 brokerage. So that's quite interesting. They don't charge brokerage. They just charge that FX fee. So let's have a little bit of a dig and see if that FX fee is really, really high. So I had a bit of a look and their FX fee is 0.7%. So it is on the high range, but it's not too bad considering you don't have to pay any brokerage. Then they have a 0.5% fee if you want to express transfer. So if you want to do it instantly, then that's what you have to pay. Otherwise, you can just wait the date, however long it takes. I think it's a couple of days. So that's, you can avoid that. And then they also have a 2% fee if you want to pay by debit or credit card. And that's pretty high, but again, you don't have to pay that fee. You can just do a bank transfer and it might take a little longer, but you can avoid all those fees. So the lowest fee that you could be charged is 0.7%, which is far below any of the others that I've just mentioned. However, and this is a big however, there's a reason that I don't have most of my money in this platform, even though it's the cheapest in terms of trading. And there's really one word that sums this up, and that word is trust. I trust Commonwealth because it's been around for a very long time. It's Australia's biggest and safest bank. It's in the top 25 world's safest banks. So I feel confident that my money is safe there. And if something significant happened to Commonwealth where my money was at risk, in all likelihood, the government would step in and do something to protect consumers like myself. The same cannot be said for a platform like Stake. As I said, this company was founded in 2017. This company is new. It doesn't have the reputability of Commonwealth. And while in all likelihood, if you invested in this company for a long time, or you invested money through this company for a very long time, in all likelihood, nothing would happen. When it comes to my money and the majority of my money, I want to know, I need to use all of the resources that I can in order to make sure that it's secure. And by putting my money in this platform, I would not be doing that. Now, this is kind of a weird thing to say because I used to be affiliated with this company and I'm not affiliated with them anymore. But this really has nothing to do with that. That's just my personal opinion and it's how I felt the whole time when I was affiliated and now that I'm not. I've always felt that I want to keep, and you should want to keep your money or the majority of your money in something that's safe, even though it might cost you a little bit more. So that's just my opinion. Of course, you can put your money in here and in all likelihood, it would be fine. But when it comes to your wealth, you want to make sure that you're taking every step you can in order to protect yourself. And one of those steps is to pay a little bit more on your transactions to have your money and your shares safely in a bank that's highly reputable in terms of global banking systems. So that's all for this video, guys. I hope you enjoyed this one, and I hope I helped answer some of your questions if you guys were wondering how you could get started in investing in US stocks from Australia. I apologize to everyone else out there who's obviously not watching this at the end of the video if you're not Australian, but I'll apologize anyway here. Leave a like if you enjoyed this one and let me know your thoughts down in the comment section below. If you have any video topics that you'd like me to cover, then of course leave them down there and I'll go check them out. But I hope you guys have a great day and I'll see you in the next one.